Hello nieces, hello nephews, it's your Uncle Charles here and welcome back to my YouTube channel where we do unbiased price action analysis. Excuse Uncle, can't even talk right this morning, but yeah, I was very under the weather yesterday. Apologies to everybody why I didn't make a YouTube video. But if you guys recall from the previous video, Uncle Charles was talking about how we are currently in the chop phase and we have a structure. I had this descending triangle pattern here. We also have another little uptrend here. It looked like a different type of triangle pattern if we put it with this one. 3 touches. If I change the color to white, you guys can see that. All right, triangles within triangles, but we have a structure, and no matter which triangle you're looking at, the point is still the same. We are in the chop phase where we're just getting back and forth action up and down with not much follow through. But I have a feeling, guys, that today, Wednesday, December 18th, at 2:00 p.m. Eastern Time, we're going to get the FOMC interest rate decision. And then 2:30 p.m., we're going to have Uncle Powell with his little press conference thingy. I have a feeling, guys. Fingers crossed if you're watching this. Fingers crossed that we finally break out this chop phase, because Uncle have been seeing a lot of up and down talking. Like the bulls are being bullish, the bears are being bears, and they both sides believe they're right. But you and I know that both sides can't be right. So once we break out this chop phase, we can finally find out if the bulls are right or if the bears are right. But Uncle Charles' job today is not to tell you where we're going, because I'm probably gonna be wrong anyways. But what I can tell you is what it would look like and how to trade this mess. Okay? It can happen before FOMC, but I'm going to assume or believe as of right now that to break out this chop phase, to break out this structure, we're going to need some volatility, and I think FOMC is going to bring it for us, okay? Now, if this chop phase ends bullishly, you guys should know what Uncle Charles is looking for, okay? I have a couple of supports at 605 and 604, okay? 604 is based on this uptrend line, and it's also a fib level, okay? Now, if we're above 605 and 604, next resistant level that I have is 607 based on this downtrend resistant line. Above 607, we'll put 608.4. That's a fib level, okay? If we can clear 607 and 608.4, I'm going to lean bullish because that's a breakout, and we could be entering the next trend phase, which could be bullish, and that could be the Santa Claus rally that all the bulls have been talking about, okay? So above 607 and 608.4, a bottom could be in. And 610, 611.5, 613, 615, and 616.5, that's a fib level, would be my upside targets. That is the potential bull case scenario. So you want to look to long using the 15 to 30 minute chart, right? Or higher, up to you. Whatever way you think is best. But I like to use a 15 to 30 minute chart, right? Like when we had the breakdown of 607 on the 15-minute chart, definitely led to more beautiful downside. Okay? So if we can clear those levels, bullish. But here is the bear case scenario, guys, okay? Got 605 as support, but the critical one is at 604. That's a fib level, also combined with this uptrend line. If we break down that level, I got the next level at 602. Next target is at 602. Now, all for the M pattern people who love trading M patterns, we could have a potential M pattern playing out, but we'd have to break down the 602 level, and that would definitely be bearish. Not only would it be an M pattern playing out, but we break down the structure of the 604 and 602 level, which could send us back to the trend phase bearishly. Does that make sense? A bearish trend move to the downside, maybe all the way down to 590s. Again, that would be pretty nice. But it would need to break down 605, 604, and 602. If we break down those levels, bearish, okay? Let's try to keep it simple when FOMC come out. You got to watch out, too, because around 2 o'clock, we get some type of move, and then 2:30 after or when J Powell speaks, we get like some type of reversal. So keep the false breakout and the false breakdown setup in mind. Okay, guys, keep the false breakout and the false breakdown in mind. What is that? What is a false breakdown? Well, notice here, right? There's a 15-minute chart of SPY. Notice how it broke down my 605 level right here. And then it recaptured the 605 level right here. This is an example of a false breakdown setup, when it breaks down a level and then it recaptures the lost level. And this right here would be an example of a false breakout. When we clear the 607 level and then we break it back down, that's a false breakout. I'm just giving you examples, so if it happens with FOMC later today, you'll know how to trade it. We clear level and then break it back down. Watch for the reversal. It usually comes around 2:30 or after 2:30, okay? So, yeah, that's my plan for SPY, all right? Overall, though, 602 to 607 is still the chop range. As long as we are within that range, guys, we are still overall in chop mode, okay? Now, Triple Q has a chop range of its own. You guys can see here is an inside candle setup. Inside candle setup is yesterday's candle is within the range of the preceding candle. That's a sign of chop. However, with FOMC today, it might not last that long, okay? If this is to be bullish, I have resistance at 539, okay? Updated levels here, 539. If 539 clears, 540.5, 542, and the critical fib level at 543.5 would be in play. That's the bull case scenario. Now, if we start breaking down support, 537.5 and 536, that's bearish with 534 and 532 fib level in play. And below that, I have 530 and 528.6 as targets. Watch for either the breakout or the breakdown. Tesla. Now, interesting, Tesla has just been destroying the bears. However, yesterday it closed at 479.8. Around the pre-market, it's around 470.4. We get in this is a decent sized gap down right now, okay? Now you notice this big body green candle on Monday. Yesterday we got some wicks on this candle. We got to be careful this is not an evening star pattern, because if it is, it's starting off nicely with this gap down. What I need to see to be bearish is more support levels failing. It's around 470.6, so I have support at 470, 467.5. If those levels fail, 466, 464, and I think all the way down to 457.5 would be in play. And below 457.5, bears take control. We're going to get a much deeper pullback to the downside. Okay? Now, if the plan is back to the upside, then 472, 474 must clear to put 476 all the way up to 480 back in play. And there's a good chance we could go all the way back up and test 484. NVDA, very nice pullback. You guys see it's like this head and shoulder pattern here. We went down and broke the neckline, hit this fib level around 127.2, but now here we are gapping up back above the neckline. Okay, if more upside is the plan, I have resistance at 135 and 136.5. If they clear, 140 is in play. And above 140 would be a breakout of this downtrend line, and I would be bullish above 140. Okay, I'd be bullish above 136.5, but above 140, I think a bottom could be in. Now, if we fail to break out above 135 and 136.5, and we break down support at 133, then 131.5, 130 for the gap fill, and all the way back down to 127-ish would be in play. Okay. IWM broke down a critical fib level I had around 232.5-ish. It's around there, lingering around there now. That's the equilibrium level, okay? If it's above it, if you want to look to long, if it can clear 234 and 236 to put 239 and 240.8 back in play. Above 239, a bottom could be in. Now, if we're below 232.4, and we break down next support at 230, that would put 228 in play, with 226 and 224-ish in play. That's a big gap around 224-ish, okay? Apple is just continuing to look bullish. I would not favor a pullback unless the behavior of the price action changes. It's going to need like some type of waterfall move down. But either way, I have support at 253 and 251.5. If those levels break down, then maybe we can get a pullback down to 250, 248.5, 246 or lower. Okay. Otherwise, above 251.5 lowest, I'm still overall bullish. Staying above 253 would keep 255, 257, and 260 in play. Amazon, it's above. I have a 232 fib level, so above it is bullish. Okay. With next resistance at, wow, we're at new all-time highs. Goodness. Well, yesterday's high was around 233, so we're above it. So if it's above it, 233 would be support, and I have nothing until 240, which is the next fib level. Either way, to be bearish, it'll need to stay below 233, break down 232 and 230, and that could put 228, 226, and 224 all back in play. Meta, I need to see Fibonacci resistance, which is at 623.5 clear to favor longs, and that could possibly send Meta back up to 628 and 630. Above 630, I would definitely favor a lot more upside, and some type of higher low is in. Otherwise, below 623.5, look to short if 622 and 620 fail as support, and that will put 617, 615.6, and 614 or lower in play. Microsoft continuing to look bullish as well. Last Monday, right? This is last Monday, a couple days ago, we cleared the 23.6 fib level. Yesterday, we treated that level as a support. Okay, treated it as a support and bounced. So as of right now, I have next resistance at 455 and 456.2. All right, if these levels can clear, we could head up a lot higher. 460, 463, 465 or higher would be in play. Okay, I do have support at 452.5, 451, and 449.3. I need to see those levels fail, especially that 449.3 level. That's a fib level. Break it down, then we could definitely get a much deeper pullback. DXY is consolidating. What is it consolidating for? Well, if it's to the upside, 107.1 must break out. If it does, that is bullish, and I have support at 106.8. If that breaks down, that would be bearish and put 106.5 in play, and below 106.5, I would favor a much deeper pullback. Remember, DXY tends to inverse the SPY. Coin, we got a breakdown here of this trend line once again. But you guys can see a couple of times here, not once, but twice, around this fib level, this 50% fib level I got, which is around 304.5. Now, it's not pinpoint right at that level, but around that area, not once, but twice, there was some buying pressure. Okay, so if this is going to be some type of bottom, double bottom, bulls really need to step up. From here, they need to clear 312. They need to clear 312, 314, and 316 to put those higher levels in play. Still failed to clear that 322 fib level. I cannot favor a bottom is in unless we get above 322. Otherwise, if we break down 308, 306, and 304.5, that would be very bearish. I would definitely be bear bias below 304.5, okay? DOGE. Got to look at the context here. There's a couple of things we got to look at, right? I have this level at 38 cents, and we had a false breakdown setup off that level. Today, you guys can see that level's retested again as a support, and so far, it is holding. For me to trust the bounce here, I need to see 40 cents and 42 cents clear. I would definitely long, because the context is a little bit different. We have false breakdown. Now, that same level we had the false breakdown as retesting as support. I will only trust the bounce if 40 cents and 42 cents clear. So I would long if those levels clear. Another thing we need to look at is a potential M pattern, which is bearish. If this is going to be bearish, then 38 cents must fail. This false breakdown needs to invalidate, break down 38 cents. If it does, that is bearish, and I will not be looking to long. Bitcoin is just going crazy. 104 is support and 102 are support. As long as above, next resistance is 108 plus and 111,000. Okay? Can't get bearish unless we drop back below 100,000. All right? That's all I have for you guys today. Thank you guys so much for watching. Peace.